On the 23rd of July, 2025, the United States and Japan unveiled a new trade framework that may come to define not just bilateral relations between two of the world's largest economies, but also the evolving architecture of global trade and geopolitical alignment. Beneath the headlines of tariff cuts and investment pledges lies a quiet recalibration of power, priorities, and pragmatism shaped by a post-pandemic world, rising techno-nationalism, and a reassertion of economic nationalism in both Washington and Tokyo. This essay takes a seasoned lens to the deal, one that looks beyond the surface and deciphers what this really means for trade, politics, and the future of economic alliances. 1. The return of the managed trade paradigm. While free trade ideologues might welcome the rollback of tariffs on Japanese automobiles from 27.5% to 15%, this deal is far from a step toward multilateral liberalization. Instead, it marks a reversion to bilateral managed trade, a model that characterized U.S.-Japan relations in the 1980s. Back then, Japan was pressured into voluntary export restraints. Today, the dynamic is more cooperative, but similarly transactional. Trump's White House sought a quid pro quo, lower tariffs in exchange for $550 billion in strategic Japanese investment in American industries, pharmaceuticals, semiconductors, energy, and aerospace. This is not free trade. It's controlled integration, where access is priced, and national security is baked into the calculus. 2. Japan's strategic concession. Survival through alignment. To seasoned observers, Japan's decision to accept these terms is less about capitulation and more about strategic alignment in a volatile world. Facing rising uncertainty from China's assertiveness, the weakening of the WTO, and disruptions in global supply chains, Tokyo has made a calculated decision to anchor its trade security in the U.S. The investments are not mere economic sweeteners. They are a geopolitical premium paid to ensure continued access to the U.S. market and preferential treatment in future technology-sharing frameworks. In short, Tokyo is paying to stay close. 3. America's quiet shift from punishment to partnership. This deal is also indicative of a subtle shift in U.S. trade doctrine. In Trump's first term, tariffs were instruments of punishment. Now, in his second term, they are instruments of leverage and negotiation. The distinction is key. Rather than enforcing maximum pressure, the administration is offering discounted re-entry into a semi-privileged trading relationship at 15%. Japanese autos fare better than Chinese or EU counterparts. The message is clear. Align with U.S. strategic interests, and you will be rewarded. Resist, and you remain in tariff limbo. It is a form of economic multilateralism by exclusion, not building blocks of open cooperation, but a web of preferential deals rooted in national interest and investment reciprocity. 4. Winners, losers, and the domestic fallout. Winners. Japanese automakers like Toyota and Honda saw stock surges above 10%, celebrating a lifeline that preserves their competitiveness in the U.S. American semiconductor and energy sectors gain massive capital inflows for infrastructure and innovation. The Trump administration secures a headline win that looks tough but yields growth, a political double dividend. Losers. U.S. domestic automakers, still burdened with 25% tariffs on other imports, feel blindsided. GM and Ford have called the deal uneven. Canadian and EU partners, already under trade stress, now fear exclusion or being left behind without similar terms. Multilateralism, once the cornerstone of global trade, takes yet another symbolic hit. 5. Implications for global trade architecture. What makes this deal most significant is what it signals. The end of universal norms and the rise of selective integration. This is not TPP 2.0, nor is it WTO reform. It's a U.S.-centric trade ecosystem where allies earn access through economic loyalty and strategic alignment. The agreement may serve as a blueprint for future deals with India, the UK, or even Vietnam. In effect, Washington is rebuilding the post-globalization order not by tearing down trade, but by reshaping it into a hierarchy of trusted partners. Japan just secured its seat at that table at a considerable but calculated cost. Final reflections. Strategic realism in action. After 20 years observing trade negotiations, one learns to look beyond the immediate figures and into the strategic logic behind deals. This US-Japan framework is not just about cars and soybeans. It's about alliances, spheres of influence, and economic statecraft in a fragmented world. Japan has signaled that it is willing to invest in the American future in order to secure its own. The US, meanwhile, has moved from wielding tariffs as a cudgel to using them as a filter, inviting those who align and excluding those who don't. Whether this model leads to a more stable world order or merely a patchwork of transactional loyalties remains to be seen. But one thing is clear: trade is no longer just trade. It is strategy in motion.